Welcome to TradeTheNBA.com. This is John. This report is for the 1st of August. Slight little push up. We had a lot of back and forth. Again, very healthy, but we're in that zone where we're just fighting to see how far back within the between 176% things move. We've been having ease off of the shakeout slightly, but um, still, cyan has been under red. However, we're starting to see that meeting point right now where everybody's getting close. We got green, red, and cyan all within just a fractional point of each other. And that's going to be significant because each time we've had the green meet cyan, bulls have stayed on top with green being above. Uh, this particular point, it'll be interesting to see if shorts can take a little bit more activity. We're starting to see a little bit of an uptick from the NBI weight. Still only at 6.7. This is not enough to sustain any short activity, but it can create a little bit of weakness, and particularly when we're seeing steel here on the DOC fading off a little bit. If it dips below negative 13.5, I would expect a little bit more negative push, but overall, well within the range. So we get the algo LNS following underneath there. It's kind of helpful in that range when you get caught between that 176, just to get an idea of where the expectation for a turn, uh, just to actually it's just more looking for a median return, and that would be the low side of it there where you see the green line. And I think that's right around that 45-55 range. So that's still a significant enough move from a pullback standpoint. From an NQ, looking stronger than the NASDAQ for sure, but when we go down to the DOC, you can see a little bit more problematic because it's had a bit more decent push from the steel or short-term buyers, and now mid-term buyers fading off a little bit, and you're about to already get the crossover of cyan to red, just a 1 point difference there. So that would be a significant sea change because it's about the overall strength, and you can see from a shakeout standpoint, the Nasdaq has been considerably weaker in general. So the S&P has really been holding it up. So it's interesting. We had before the Nasdaq was propelling the S&P, and now that the Nasdaq sort of pausing, it's allowing the S&P to be the glue holding things together at this particular stage, and it can go back and forth like that for a little bit of while. Um, the real question will be, do we get a change in the NASDAQ from a short standpoint? It's been fading off after it had its little peak where we saw a lot of this softer, wilder range. But ending the month, things are pretty clean. Don't think anyone can complain about that. Treasuries in line with where they should be, so no real objection to that. I think things have kind of normalized and we've gotten past the pretend aspects of things, and the realities are really have set into the market. The problem area becomes here when we start looking at oil, and this is going to start to put some downside pressure, I think, on the market too, um, because any idea that there was going to be easing just isn't going to happen. And so then the question becomes, can the economy and everything absorb what's taking place? And I think it becomes a time where we start to look at some of the macro data and get a little bit more detailed. And not one of those gloom and doomers as far as that goes. I think that there are certainly problem areas, but it hasn't become widespread enough to be dramatic. And of course, you all know my laugh about the euro and where it is level wise. But I think that with what we see in oil and that, it just becomes extremely difficult for the euro to continue to hold this level. There's going to be people looking for a better return, and that's going to be in the U.S. at this particular stage, even with the modest increase from the ECB. Interestingly enough, oil rising like it is should generate a push for gold to make a significant turnaround. It started that the other day, a little bit of softness at this particular stage, but that's also going to be impacted by market sell-offs. Sometimes you get an immediate reaction from gold just as people are reallocating in that. But we're in a decent trend run here from a gold standpoint. So I'm still looking for push higher from gold, especially with what we're seeing from oil. The fact that Bitcoin now has completely filled all the way down to the bottom of that positive extreme. No shock there. There's just no excitement in any of these things at this particular stage, particularly with all of the central bank digital currency talk. Um, because at the end of the day, if you do get a central bank digital currency, they're going to make it very difficult to maintain crypto in any way, shape, or form because obviously it would be in competing interest, and central banks don't really care for competition. It's just not a thing. For a 50K, you can see after the dip pretty much holding flat, going back and forth, and this is literally what we've been getting is a lot of chop from the upper end range here, and still in a weak mode. In fact, you have MBI white leading magenta and well below the 25 at this particular stage, so that's should be enough to see a little bit more of a sustained fade. Hasn't materialized in any strength, but this is the reality of it, where trades against that for a brief point and then pulls right back into it. We'll keep an eye on that. But when we look at it from an intraday standpoint, it was mostly up at the beginning, and then once we got to the actual open, things got a little bit soft until right at the end of the day, after you had accumulated enough people thinking that the market was going to fade. You take advantage of them, and post market, boom, shoot right back up, clear all those stops, taking advantage of everyone. And then we move into the post market, all that has been lost again. So it was just about clearing stops. You can see the little watershed fall off there that just takes us right back to exactly where we were with the breakout move. It's kind of obvious. It's the classic play, and we see it over and over, and we're going to continue to see it because there's no real leadership in any one direction, particularly at these levels. I don't consider it extremely overvalued in any way, shape, or form. It's merely a function of what we've seen from inflation and devaluation, and we all know that the market just isn't going to accept that. Had things economically been doing better, I think that we'd see definitely a push towards 5K in that without any trouble. But there's still a lot of headwinds, and that's something that has to be taken into account and always be respectful of at this particular stage. So we just continue to follow the readings. Probably for those receiving the indicators, will be the last time you're going to get some of them individualized, because now I've converted a lot of the particular chart programs just to be activated on and off within the paint bar itself, and there's no reason for them to be individualized. So that will be a neat feature that you'll be able to start using, and that's also going to be impacted with the ABM resets and various other things. So you'll start to see some of that stuff pop up as I do videos and go through explanations of everything. But as always, though, continue to look for me on Skype chat. Trade well. We'll talk in later.